Question 151. Similar to a trust agreement that secures a loan on real property, A. blank secures a loan on personal property. A. Pledge agreement. B. Security agreement. C. Collateral promise. D. Chattel holder. Correct answer is B. Security agreement. When you take out a mortgage or deed of trust on real property, land and buildings, you're essentially using that property as collateral for the loan. The trust agreement creates a lien on the real property, giving the lender the right to foreclose if you default on the loan. A security agreement does the same thing for personal property, chattel, such as cars, equipment, or inventory. It creates a security interest in the personal property, which means the lender has a legal claim to that property if you fail to repay the loan. This agreement outlines the terms of the loan and the lender's rights in case of default. Both agreements serve as a form of collateral for a loan. They provide the lender with a legal mechanism to repossess and sell the property if the borrower defaults. Question 152. A listing broker knows the property he is trying to sell has some structural damage, inadequate insulation, and it is overpriced by 10%. Nevertheless, he runs an ad that reads, "Charming, well-constructed two-bedroom home for sale, not a fixer-upper, great price." The rules governing real estate ads have structural damage and inadequate insulation are considered material defects. These are significant issues that could affect a buyer's decision to purchase the property. The broker's ad directly contradicts the known facts about the property. By stating, "well-constructed," and "not a fixer-upper," the broker is making false claims about the property's condition. This is misrepresentation. While "great price" could be considered puffing, exaggerated opinion, misrepresenting material facts is not. Puffing is generally considered to be harmless opinion. Misrepresentation is a factual lie. Real estate brokers have a duty to disclose material facts to potential buyers. Lying in an advertisement is a clear violation of this duty. Therefore, the broker has violated the rules governing real estate ads by misrepresenting material defects. Question 153. Interested in possibly buying a property, optionee Roscoe entered into an option contract with optioner Eric to purchase it, with a 6-month term. Which of the following is correct? A. A bilateral contract binding both Roscoe and Eric has been formed. B. The agreement imposes a duty on Roscoe to purchase the property before the expiration of the term. C. The option conveys a legal interest in the property to the Roscoe. D. None of the above. Correct answer is D. None of the above. An option contract is a unilateral contract, not bilateral. Only Eric, the optioner, is bound to sell if Roscoe, the optionee, chooses to exercise the option. Roscoe is not obligated to buy. That's why a bilateral contract binding both Roscoe and Eric has been formed is not correct. Roscoe has the right, but not the obligation, to purchase the property. He can choose to let the option expire. That's why B. The agreement imposes a duty on Roscoe to purchase the property before the expiration of the term is not correct. An option contract gives Roscoe an equitable interest in the property, not a legal interest. Legal title remains with Eric until and unless Roscoe exercises the option and the sale is completed. That's why C. The option conveys a legal interest in the property to the Roscoe is not correct. Therefore, none of the provided options are correct. Question 154. Can a broker with a listing agreement that includes an option to purchase the property exercise that option for himself? A. Yes, if broker provides written notice to the owner that he holds the option and discloses any profit he might take as a result of the transaction. B. Yes, if he shares the listing with another broker. C. Yes, if he voluntarily suspends all other real estate activities for the duration of the option. D. No, under any circumstances. Correct answer is A. Yes. If broker provides written notice to the owner that he holds the option and discloses any profit he might take as a result of the transaction. A listing agreement with an option to purchase creates a significant conflict of interest. The broker is essentially acting as both the seller's agent and a potential buyer. To mitigate this conflict, the broker must provide full and complete written disclosure to the seller. This disclosure must include 1. The fact that the broker holds the option. 2. Any potential profit the broker might make from the transaction. 3. That the seller understands the conflict of interest. 4. That the seller gives their informed consent to the broker exercising the option. The broker's fiduciary duty to the seller requires them to act in the seller's best interests. This means the broker must ensure the seller is fully informed and not taken advantage of. Sharing the listing or suspending real estate activity does not remove the conflict of interest. Only proper disclosure and consent will. Question 155. For a loan to be considered federally related, requiring that its lenders comply with the disclosure requirements of RESPA, Real Estate Settlement Procedures Act, the loan is A. Made in whole or in part by any federally insured or federally regulated lender. B. Made in whole or in part, or insured, guaranteed, supplemented or assisted by HUD. C. Is intended to be sold by the originating lender to Fannie Mae, Ginnie Mae or Freddie Mac. D. Any of the above. Correct answer is D. Any of the above. RESPA and federally related loans. RESPA is designed to protect consumers by requiring lenders to provide clear disclosures about the costs and terms of mortgage loans. The definition of a federally related loan is broad to ensure that most residential mortgage loans fall under RESPA's regulations. A. Made in whole or in part by any federally insured or federally regulated lender. Most lenders are federally insured or regulated, so this covers a large portion of mortgage loans. B. Made in whole or in part, or insured, guaranteed, supplemented or assisted by HUD. HUD, Department of Housing and Urban Development, involvement, such as through FHA or VA loans, makes a loan federally related. C. Is intended to be sold by the originating lender to Fannie Mae, Ginnie Mae or Freddie Mac. These government-sponsored enterprises, GSEs, play a major role in the secondary mortgage market. If a lender intends to sell a loan to them, it's considered federally related. Therefore, any of these scenarios trigger RESPA's disclosure requirements. Question 156. Someone who is an innocent purchaser of a negotiable note with no knowledge of any defect is A. Correct answer is B. Holder in due course. Holder in due course, HDC, is a legal term that refers to someone who acquires a negotiable instrument, like a promissory note, in good faith, for value, and without notice of any defects or claims to it. This status gives the holder certain protections and rights, such as the ability to enforce the note even if there are defenses that could be raised against the original payee. Question 157. Recording is not required for A. Homestead declaration. B. Notice of default. C. Notice of completion. D. Grant deed. Correct answer is D. Grant deed. A grant deed is legally valid between the buyer and seller even if it's not officially recorded. Recording primarily serves to publicly document the ownership transfer, protecting the buyer from potential future claims. Other documents like notices of default and completion, and often homestead declarations, typically require recording for legal effect. Question 158. A contractor built an outdoor stairway for a home being renovated. The owner later refused to pay the contractor for their work. The mechanic's lien filed by the contractor reverts back to the date A. Renovation was finished. B. Renovation began. C. Contractor's work was finished. D. Contractor's work began. Correct answer is B. Renovation began. Mechanic's liens, in many jurisdictions, relate back to the date that work commenced on the overall project, not just the specific work done by the individual contractor. This is to ensure that all contributors to the project have equal priority in claiming their due payment. In this case, the renovation of the home is the overall project. The contractor's work on the stairway is part of that larger renovation. Therefore, the lien's priority will be determined by when the renovation began. Question 159. Good faith deposits can be in the form of A. Money order, B. Cashier's check, C. Promissory note, D. All of the above. Correct answer is D. All of the above. A money order is a secure form of payment, making it acceptable as a good faith deposit. A cashier's check is also a secure form of payment, as it's drawn on the bank's own funds. In some cases, a promissory note, a written promise to pay, can be used as a good faith deposit, though this is less common than cash or checks. It is still a valid form of consideration. Therefore, all the listed options are acceptable forms of good faith deposits. Question 160. Information from a Chapter 7 bankruptcy are kept on credit records for blank. A. 5 years, B. 7 years, C. 10 years, D. Forever. Correct answer is C. 10 years. Chapter 7 bankruptcy is a legal process where a person's non-exempt assets are sold to pay off debts. This allows for the discharge of most, but not all, debts, offering a financial, fresh start. Eligibility is determined by income, and some debts, like student loans, are typically not eliminated. It serves to liquidate assets and discharge eligible debts. Chapter 7 bankruptcy filings remain on credit reports for 10 years from the date of filing.